Tens of millions of traders around the world are scratching their heads over why gold stocks have so substantially underperformed the gold price in recent times. Over the last 15 months, gold has risen by over 20%, while the GDX Major Gold Miners Index is down by 18%, and the Junior Gold Miners Index, GDXJ, is down by a whopping 40%. This just makes no sense at all, and frankly I have no explanation other than gold stocks do move in cycles, and the upward leg part of the cycle is just around the corner, if it's not already here. The reality is that the strongest leg of gold's 11-year bull market is yet to come. There are three reasons why I'm so certain a huge run in gold and gold stocks is coming. The first reason is because the growth in fiat money globally is progressing at around 8% per annum, while the supply of gold actually being produced has only been rising at about 1% per annum. So one doesn't need to be terribly clever at maths to deduce that the gold prices must rise as paper currencies are devalued and tangible assets which are in finite supply become increasingly valuable. It's important to distinguish between the short-term gold price, which is set by the futures gold market, and that's a heavily manipulated scenario, and the actual physical availability of gold to purchase. The vested interests, and I mean central banks, which are holding the price down, will only be able to do so for a period of time. Eventually, real market forces will take over and gold will skyrocket as investors scramble to buy the real thing, and not just a paper contract that may not be honoured in a financial panic situation. The unavoidable reality is that the debts of Europe can never be repaid, with high unemployment and an ageing population over there, so large-scale default is a given in my view. And large-scale default can only occur if central banks buy up all the rubbish, which means massive money printing. The second reason is the enormous uncertainty surrounding the future of the US dollar, not only its relative value, but also its status as the world's reserve currency. There are moves underway for trade in oil between countries like Russia, China, India, Iran and Venezuela in currencies other than US dollars. No one knows how the next 5 years will play out, but the substantial uncertainty alone will cause an increasing movement into gold. The third and most important reason is that all instruments in financial markets revert to a longer-term mean or average when they've become historically extended. This is an irrefutable law of human nature which is built on fear and greed driving markets first one way to an excess, then back the other way to overcorrect. It's happened all through history and always will. So the massive disconnect between gold prices and the underlying gold metal will correct itself. In fact, gold doesn't need to increase in price at all, and gold producers could rise substantially just to catch up. The largest gains will not be in the gold majors. They'll be seen in the gold junior producers. Just as we saw coming out of the GFC lows in March of 2009, when rises of 500% to 1,000% and more were recorded amongst Australian producers. One has to remember that there are many gold producers these days which are very solid businesses, with no debt, no hedging, high profit margins, and high returns on shareholder equity. Some these days are even paying dividends. So in addition to all these wonderful attributes, these stocks are also very cheap by any scale of assessment. So what elements do you need to have in place to capture these future massive gains? You need to know what to buy based on solid fundamental evaluation. There are currently 47 existing gold producers listed on the ASX, but I've identified the best 12 or so, and the rest really aren't worth trading in my view. There are some major potential nasties amongst the rest, and I don't like getting surprises when I trade. You need to have the ability, secondarily, to read crowd behaviour via chart patterns, because in the short term, the fundamentals often don't mean very much. You can't just buy a good stock and expect it to go up. So this is a skill that takes many years to develop, and most traders don't apply themselves sufficiently to ever get there. Thirdly, you need to be able to shut out the opinion of the masses. This is absolutely essential, and Become a focused contrarian trader. With anything short of this, you're probably going to lose money. In short, everyone needs an environment where they can flourish by being supported for a lengthy period of time. And finally, you need a clear and concise trading plan that defines how much activity is needed to achieve your annual profit target. Because every time you trade, you take on a risk. So why do more than you need to? Be selective, be decisive, and be a consistent winner. We're on the cusp of one of the great money-making periods of this decade. So ensure that you have the resources at your disposal to capitalize on these opportunities, which really starts now. If you want to trade and invest with us with a big edge on the market, go to our website, specialistshareeducation.com.au. You can access our free video series on creating trading cash flow and smart investing. Plus, you may also register for our weekly Ask the Expert webinar.